Hey guys, Max here, and this is your daily market update for yesterday, Thursday, the 23rd of December. Of course, it is now Christmas Eve. Markets will be closed for today pretty much everywhere, and we aren't expecting much news to come out today, so there will be no video tomorrow. As for today, though, we're going to look briefly at what happened yesterday. Markets moved upwards for the most part. We have a few things to cover regarding China and crypto as usual, so let's just get right into it. So stocks did well across the board. Industrial and retail in the S&P 500 led the charge. Nikola had a decent surge on news that they've delivered one truck. The Dow Jones and the Nasdaq both did decently as well. JD.com fell a bit on the news that Tencent was going to be paying out dividends in the form of JD stock. It seems like people aren't too confident that these new shareholders are going to hold on to those JD shares. Crocs announced they were going to buy another shoe brand, and they plunged on that news. The MSCI World Index, so the entire world stock market really, rose about 1% over the day. There were no major shifts in any currencies. The dollar's been holding strong as it has been for months now. Bond yields advanced a little bit. The 10-year Treasury and Britain and Germany's 10-year yields all advanced by 4 basis points. Now, oil prices are rising again, now sitting around $74 a barrel, heading back to those highs we saw earlier in the year, and actually gold rose a little bit on the day as well. Basically everything did well yesterday, or at least didn't do badly. Why? Well, market sentiment was quite strong and volumes were very low because we're close to the holidays, so volatility is a little bit higher than usual, but it was just in the upwards direction. Now, why has sentiment improved? Well, the US consumer sentiment actually increased in December. We just got figures from that through, and that is really good news because it's basically been at rock bottom for 6 months now, and this could be a sign that it's going to improve. Of course, consumer sentiment affects things like household spending and household debt because it's just a measure that shows how normal people feel about the economy. And when they think it's good, they spend more money and they take out more debt, which improves the economy. It stimulates spending, it stimulates wages, and everyone does better. That being said, though, sentiment is still very low because people are worried about a mixture of things, but mostly inflation and all of these new variants that are always popping up. And this change isn't enough to change the fact that consumer sentiment is still very low. It's still very close to rock bottom, but this could technically be the start of an improvement. So that news at least was good and probably helped drive a strong day for the US markets in particular. There was, though, some bad news as well, sadly, and this might suggest that the consumer sentiment increase really isn't a change in trend at all, but just a little bit of an outlier. And that is consumer spending actually fell over the last month. This figure is obviously related to sentiment as it's often derived from it. And the nominal figures, so just the physical amount of dollars that was spent, did go up. But when adjusted for inflation, real figures actually went down, which means that people are spending less money today than they were a month ago. Obviously, for a consumer-driven economy, this is bad news. It's not bullish at all, and it could suggest that people are feeling the effects of wage inflation being lower than real inflation and the uncertainty surrounding inflation. Whatever the real reason for this drop, of course, no one knows for 100% sure what it is. It doesn't really align with the good sentiment news we got, so no one is 100% sure what to make of this, but the markets by and large are giving more credence to the consumer sentiment figures rising than they are to consumer spending figures falling. We also saw jobless claims come out, and they stayed pretty much exactly the same, which was pretty much expected, as the Fed's attempts to increase employment have been stagnating a bit recently, and they've obviously changed their aims from stimulating full employment to preventing runaway inflation, or at least that's what they're claiming they've changed to. We got a little bit of news from Japan's central bank, and we saw some updates, and it's pretty much the exact same stuff that they've been seeing for the last 30 years. Their economy is slow, inflation is very low despite sky-high government spending and attempts to stimulate the economy through asset purchases and the like. The country is going to keep interest rates at records low for the foreseeable future. To be honest though, this really isn't surprising. That entire market is a zombie economy, and anything other than the most dovish, loosest policy in the world would see everything fall apart. It seems that there is just no respite for the Japanese. Their lost decade continues past 30 years now, and it isn't going to stop anytime soon. But that is pretty much it for the market update, so now just onto a little bit of the news. Now, China's rare earth metals and minerals and the dominance they hold seems to be increasing as there is a huge merger going on between all of the biggest players in this sector in China. The country is obviously blessed with huge deposits of very rare and valuable materials, and this mega group that they're creating is supposed to allow them to extract even more of it even faster. This is actually bullish for the Chinese economy. I know some of you will be surprised to hear me say that, but the truth is that it doesn't matter how bullish this news is, it's not going to be enough to counteract all the awful news that is coming out of China every other day. That being said, this move makes perfect sense. This sector is going to do well in the future. This new mega corporation is going to have backing from the CCP, so it will be able to act with absolute impunity, and it will probably be very successful. On top of that, in a world of EVs and semiconductors, this is a little bit worrying for everyone who isn't Chinese. Obviously, the last year has taught us that China is not a gentle giant. The administration is aggressive and will purposely hurt other countries just to get a comparative advantage, and rare materials is in an area where that will continue. Now, in China news, but a little bit of US news, Biden did just sign that bipartisan bill to punish China for their oppression of the Uyghur people and their use of slave labor in the west of the country. It had unanimous backing, both parties and every person supported it, and that is great to see. This is a good thing. It's good to see the US make a start on this, and there's a long way to go, but hopefully this is just the start, and we're going to see more bills like this coming out. We're going to see more countries like the UK and Australia and European countries as well following in the US's footsteps and finally trying to make a change. Now, moving on to crypto, and the SEC has just denied 2 spot Bitcoin ETFs once again. This basically means that ETFs, which literally just buy and hold Bitcoin for investors, are still not allowed in the US, even after they allowed that Bitcoin futures ETF a few months ago, but this really isn't too surprising. The fundamentals of these ETFs are the same as the fundamentals of the ones which were rejected in the past, and this is an area where the US is falling behind. I believe spot Bitcoin ETFs are allowed in Canada, for example, and the US is in danger of missing out on the next trillion-dollar industry if they continue to shun crypto. The innovation and sheer amount of capital available in the US means that if they want the industry to stay in the US, then they can easily achieve that just by acting quicker and regulating the industry in a reasonable manner. No other country in the world can really compete with the US if they decide to go for this, not even China, but the regulatory authorities just don't seem to care all that much. Give it 5 or 10 years and I reckon there will be a sudden change of heart when the US realizes that this trillion-dollar industry has chosen other countries to build itself in, and the US just might find itself on the back foot. But again, with the sheer amount of capital at play in the US, the huge pool of talent, the country will win out if it wants to. In other crypto news, we also saw Tether print $1 billion of USDT out of thin air, and they bought Bitcoin with it and pushed the price up $2,000 in an almost instant. I know a couple people have asked me just to give a very brief explanation of how Tether manipulates the crypto market, and very simply, that's what they do. They print USDT out of thin air, they use it to then buy Bitcoin or another crypto asset, and that increases buying pressure and forces the price up. Now they can claim that Tether is fully backed by dollars because it's backed by Bitcoin, which is worth a certain amount of dollars, even though it's inflated by their printing, and so they can print more Tether. It is pretty much a giant Ponzi scheme. Tether is an awful company. It's going to implode one day, but it could last 10 years before it implodes, so no one's taking bets on when it's going to happen. But the truth is, Tether manipulates the markets. There's nothing else to it. You cannot deny it. It is plain as the eye can see. Don't use USDT, it's just not worth the risk. That is pretty much it for the day. It is Christmas Eve, so this has been a shorter video than usual. I want to get over to my grandparents and see my family. So go enjoy yourselves as well. Spend time with your families. I'll be taking tomorrow off as well. There will be no video coming out, but other than that, I'll be back to the usual schedule by Boxing Day. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. And if you join before December ends, then the next month will be entirely free. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up. You don't have to buy anything or hand over any card information. So if that sounds interesting to you, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.